Hey, welcome to your carrier update, brought to you by PowerFleet. I'm Mike Vincent. He's Zach Strickland. Let's do it, man. What's up?
Tender rejection index for the United States here in blue. The rate of rejection by carriers to their shippers electronically. We've been averaging above 20% for the last year. And we saw this big increase here in August. You know, it's been a steady increase, which is kind of breaking the trend of what we've seen over the last several months versus March activity, et cetera. And now it's coming back down through the holiday just slightly, about 0.5% or so.
Yeah.
A little unexpected, but it does look like shippers did get ahead of the game a little bit. And this little green line here spiked up as they increased their lead times the days before the holiday. So it looked like, you know, we'll show you here in a minute, the demand.
Almost 4 days.
Yeah. That's a big deal. I mean, we laugh about it, but
it is a big day. It's big. 4 days is big. You're calling on a Monday for a pickup on a Friday is what you're doing.
It's a huge deal. It's a huge deal, especially in aggregate like we're looking at right now. That means everybody kind of started pushing freight out into the next week. They got a little bit of ahead of the holiday. Yeah. I guess getting rejected at 1 out of every 5 over the last year.
People are a little sensitive.
They're thinking maybe
sensitive to those.
Maybe we're not going to pay such a high rate for that freight moving on Friday anymore. You know, the spot market tends to get really hot right before a holiday, and then it kind of settles out.
And we get conditioned to things, right? Is the market getting conditioned to certain things and saying, well, you know, we got to go a week earlier, and it's going to be 4 days instead of 3 because it's cheaper on the 4th day, and people are getting, who knows? But those are the dynamics that are going.
Yeah, they finally figured out, though, by a little bit, that getting in front of it and maybe not waiting till the last minute is going to save some money.
Saves a little money. Give those, carriers getting a little break here. Don't have to be there in 2 seconds, right?
But it's still 22.7%.
It is, and rates are still pretty high.
Very high. We've seen a little bit of an improvement in terms of overall activity. Yeah. Let's look at our tender volume index just to show the demand side of this. Increasing tender volumes all the way through August up to the very end, and then over the first few days of September, it kind of flushed out a little bit. Now, again, it's still very high.
It's a very nice summer trend that we don't normally see.
Yeah, we don't. Normally, this thing spikes up right up, and it bumps right up to the holiday trough that we see right here, and then it dies out. It happened a little bit on July 4th. Did not happen Memorial Day.
No,
that's typically what we see right there. Is that big little all the way up to the very last minute. We're gonna push that freight out, and it seems like everybody's trying to. Shippers are figuring out.
It's shifting.
Let's just move this back a few days.
And we saw that also in the tender lead times.
Yeah, exactly.
They shifted here and here instead of being right up against.
They moved their behavior by a few days. It doesn't seem like a lot, but it makes a huge difference in the overall market. So let's look at the weighted rejection index map real fast. See where everything is getting tighter and looser. Blues indicate tightening. Reds, oranges indicate loosening. A lot of blues in the southern corridor here. Now, Ida hit, a few weeks ago, a week and a half ago or so. Right. And, it may have impacted some of these markets, Atlanta, Houston, Dallas, Montgomery, all these markets showing blue indicating tightness. Now, the biggest two of them, Atlanta and Houston, let's look at the chart of Atlanta and Houston and see just what kind of rejection rate we're talking about here.
So Houston's in the blue.
Houston's in the blue, Atlanta's in the pink. And Atlanta, week over week, it's trending higher, 22.6%.
Decent steady since the middle of August.
But it's not a spike.
No, but it's a good strong.
Houston, this is a huge jump, and it's jumping through the holiday, contrary to the rest of the market. So the Houston market, it was down here around 14%, been one of the, stabilizing very nicely over the course of August. And now it's all the way back up to 17.5%. If you're a carrier and you've been avoiding this market, spot market activity probably heating up a little bit down there.
You saw some lower at anchor numbers with Yantian, et cetera, shut down, and then you see it starting to spike, and then a few weeks later you see OTRI and Houston spike.
Well, and I'm sure the hurricane and I-10 shutdown
didn't help things. Yeah, that helped a little bit as well. But yes, so there's several forces there, right?
Let's look at the Houston map of the lanes just to see what we're seeing in the overall lanes. I look for greens to be across the board in a market that's tightening significantly. You see there's greens all the way through here indicating those percentages are the tender rejection rate increases for the individual lanes. Lowest rejection rate for some of the larger lanes, Houston to Memphis. 24%. Houston to Columbus.
Oh, only 1 in 4.
Yeah. There's not a big spread here. Not a big spread here.
Not huge, but I mean, you know, almost a third going to Columbus.
Houston to Dallas, 25%. One of the biggest lanes out there. And, and 1 in 4 lanes.
So you got tightness. You got tightness everywhere. It's interesting to see some of these, though. You get Columbus way out here and Atlanta way out here. That's a pretty desirable lane, yeah?
It should be.
Should be, but it's not.
You'd think, but it's
unbelievable. Yeah, we'll dig into it a little bit more. Thank you so much, Mr. Zach Strickland.